WisdomTree has had so much success with its Hedged Japan fund that it's rolling out a sequel, a small cap version. Here to talk about it is Luciano Siracusano. He's from WisdomTree. Welcome, Luciano.
Good to be here, Greg.
All right, well, your DXJ, which is your large cap Japan fund, it's hedged. It's up 23% this year. So I guess doing a small cap version, the DXJS, it's a logical sequel, right?
It is, and the interesting thing with Japan small caps is if you believe in the Japan story, which is they're starting to turn their economy around, if you actually get quicker growth in terms of GDP growth there and stronger consumer demand, you probably want to get some small cap exposure. So this is designed to get you broad exposure to Japanese small caps, but again, remove the impact that the yen has on your return by hedging out the yen.
Well, the DXJ really exploded in the fourth quarter of 2012 as well as the first quarter of 2013 as the yen was weakening. This summer, however, the yen has been strengthening and it really has shaved off some of the performance of the DXJ. So what's it like if you're not going to get that tailwind?
Well, who knows what happens to the yen going forward. I think up until this point, people were looking for catalysts in Japan to weaken the yen, and you've had them. I think going forward, you got to say, what are the catalysts in the United States that could potentially weaken the yen? So if you get the end of tapering in the US, which is really the end of QE3, you could see dollar appreciation and higher interest rates in the United States, which could help impact that currency translation and give you another driver about why the yen could weaken going forward, certainly relative to the dollar.
Well, the yen is now below 100 again. Do you think Prime Minister Abenomics, do you think he's going to come out with more firepower to weaken it, to get it back over 100, 105, 110?
I think he's going to come out with more aggressive legislative proposals that he can probably get through his parliament now that the elections are over. And I think you're going to see going forward, the Bank of Japan all in committed to this policy. They said they're going to buy roughly $60 billion a month in assets through the end of 2014. So I think you have the Prime Minister, the head of the Bank of Japan, all in on the policy, and now it's just a question of the efficacy of the policy and how quickly can they both stir some inflation and begin to unleash consumer spending. And I think you'll see some proposals next year that create tax incentives for Japanese investors to get out of cash and to start getting into stocks, ETFs, and mutual funds. And that could be another driver for the Japanese market.
And you also rolled out this summer the United Kingdom Hedged Pound Fund, I guess you can call it. Do you expect the same thing that's happening over in Japan to happen in the United Kingdom?
Well, I think there's an analogous story, which is the last 3 years or so, the pound sterling has been negatively correlated to the UK equity market. So as the UK stocks have been getting stronger, the pound's been getting a little bit weaker. And so we think there is potential here for a new governor on the Bank of England to put forward more aggressive monetary policies that help weaken the pound sterling relative to the dollar. And hopefully that will be good for UK stocks. The other thing that we've seen historically is that the volatility that you get from having exposure to the currency in the UK hasn't really gotten you great returns by taking on that volatility the last 5 to 10 years or so. So for people who are uncomfortable with the direction of pound sterling or even the euro, may want to think about hedging out the currency exposure from a volatility perspective. So there's really two pieces to that story, and we think it's interesting because right now in the ETF land, you only had one option, and that was to get the UK unhedged. So this gets you hedged UK, and you can use it depending on which way you think the dollar is going and which way you think the differential in interest rates are going.
All right, thanks a lot, Luciano.
All right, thank you.
Thank you for watching The Street.